Hello, hello, hello. Welcome, everybody. Welcome back to another episode of Money and the Music, the live stream brought to you by us at cryptodeposit.org. We are so excited for you guys to be here. We have several articles for today's live stream, and let's just jump right in case you're wondering what is the purpose of this live stream and the purpose of today's video, as you can see in the description, is simply covering recent blockchain news, a bit of recent blockchain news covering stablecoins in particular, which is the focus of cryptodeposit.org, covering digital assets in general, regulations, and other similar industry news. All right, now, gentle reminder to you all that cryptodeposit.org is where you want to go. Any question, just email us at any email address at cryptodeposit.org. We will get it. You can email us at info at or whatever you so wish. We are eager to get more folks, more banks, more institutional partners onboarded. So if you guys work in fixed income, if you know people that work in banking and fixed income, tell them to take a look at our YouTube channel. Tell them to take a look at cryptodeposit.org and reach out, please, please, and thank you. Now, article number one for today is going to be from Decrypt, and the title is World Cup Crypto Scams Are Targeting Soccer Fans, Law Enforcement Warns. Now, if you're in Europe, football fans, but over in the Americas, it's soccer. So law enforcement agencies are warning soccer fans of fake ticket sites and crypto payment schemes around the World Cup. Well, right on schedule, my friends. It's happening again. More large global events, more scammers. So scammers are using fake FIFA websites and ads to steal money and personal information. Law enforcement agencies have warned cryptocurrency payments are a major red flag because transactions are impossible to reverse. Well, for the most part, impossible to reverse, but certainly if you're sending it to scammers, impossible to reverse. Victims should contact law enforcement, their bank, and the FBI's IC3 complaint center. Yes, indeed. Soccer fans should think twice before sending cryptocurrency to anyone offering tickets online. Law enforcement agencies warn. Indeed. Now, what else do we have here? In a post on X on Wednesday, the LA County Sheriff's Office Sheriff's Department warned that scammers are using fake World Cup ticket sales, hospitality packages, merchandise offers, streaming services, and betting promotions to steal money and personal information, with cryptocurrency payments among the clearest signs of fraud. Be cautious of sellers requesting payments through cryptocurrency, wire transfer, peer-to-peer payment apps, gift cards, or other methods that are difficult to reverse, the Sheriff's Department wrote. Do not trust screenshots, PDFs, or paper tickets offered by private sellers. Yep. The warning comes as cities across the U.S., Mexico, and Canada prepare to host millions of fans for the 2026 FIFA World Cup. The alert also comes as crypto theft in 2025 reached $3.4 billion, according to Chainalysis. According to the department, cybercriminals are creating fake FIFA websites and social media ads that closely mimic legitimate ticketing pages. Cybersecurity experts warn that artificial intelligence is helping scammers quickly clone trusted brands and launch phishing sites designed to steal login credentials, personal information, credit card numbers, and funds from unsuspecting victims. Before buying World Cup tickets or related products, residents should go directly to the official FIFA website by typing the address into their browser, the LASD wrote. Do not rely on sponsored ads, social media posts, text messages, Telegram, or WhatsApp links, or offers that appear unusually cheap or urgent. The Sheriff Department advised victims to contact law enforcement, notify their bank, preserve transaction records, and report the incident to the FBI's Internet Crime Complaint Center, IC3. All right. The warning follows a recent FBI Cyber Division alert about World Cup phishing scams that use typo squatting, look-alike websites with slight misspellings, or alternate domain names designed to steal personal and financial information from fans. Okay, so the FBI Internet Crime Complaint Center has discovered multiple fake FIFA websites. Whoops. Let's go back here. Multiple fake FIFA websites, buying tickets, merch, or experiences read below first. The legitimate FIFA site is FIFA.com. Right. Okay, so FIFA scam coins. In May, cybersecurity firm Malwarebytes warned that scammers were using the World Cup and FIFA's branding to promote fake cryptocurrency projects. One site marketed its token as the official community token celebrating the FIFA World Cup 2026, advertising a mega airdrop, a 7 billion token total supply, and a participant counter pinned to the symbolic number 48, the count of qualified national teams. The company wrote, another FIFA shows official mascot using tournament branding to sell an unlicensed token. Malwarebytes also found websites claiming to sell official World Cup tokens and offering crypto giveaways. None of the sites we examined are connected to FIFA, Malwarebytes wrote, noting that FIFA does not have a real digital collectibles ecosystem called FIFA Collect. Okay. None of the sites we examined sit inside that ecosystem. The real partners for 2026 are documented, easy to verify. World Cup token is not one of them. Malwarebytes warned that anyone who buys the tokens could lose their money, end up with worthless assets, or accidentally give scammers access to their crypto wallets. Users on Myriad, a prediction market operated by Decrypt's parent company Dastan, currently believe that Spain has the best shot of winning the World Cup with an 18% chance among the full field, followed closely by France at 17%. Okay. Well, what we can glean from today's first article of our live stream is you got to be very, very careful when it comes to the World Cup and all of these scammers on trying to mimic websites and all that jazz. So let's go to article number 2. And as you can see here, article number 2 comes from Finance, Yahoo Finance, Goldman Sachs to launch tokenized real estate fund. And this is something that I wanted to talk about because we've been trying to talk about tokenized assets for a long time. Okay, it seems that the discussion about tokenized assets, tokenized RWA, real world assets, it's a discussion that's been going on for a long time, close to a decade, if not more at this point. So I think back in 2016 or 2017 at the latest, there was a hotel in Colorado that was the first asset to be tokenized. If my memory serves me correctly. Okay, Wall Street investment bank Goldman Sachs, which is traded on the New York Stock Exchange with the ticker symbol GS, is launching a new tokenized real estate fund. Goldman Sachs has partnered with fund servicing company Apex Group and digital asset exchange Archax to tokenize real estate. Infrastructure provider Onera and real estate investment manager LRC Group are also involved in the blockchain-based real estate fund. Now, the tokenization of real-world assets, RWAs, is growing in popularity, but real estate has so far proved elusive as an asset class. Yep, that's for sure. But now, Goldman Sachs aims to change that with its new fund that combines blockchain-native issuance with established fund structures, according to a press release. The new fund's shares are tokenized using Goldman Sachs' proprietary blockchain platform. LRC Group acts as manager and Archax serves as custodian for the digital securities. Onera will facilitate connectivity between participants and distribution channels, according to the news release. Apex Group is providing fund administration and depository services. Issuing blockchain-native fund units enables investment in real estate assets with precision while unlocking more seamless transferability in the future, said Goldman Sachs. Goldman Sachs stock has gained 74% in the last 12 months to trade at well over 1,000 per share. Wow, that's really quite impressive. Amazing, actually. Very good. Okay. Now, that was article number 2 for today's live stream. It's a good thing to know. We'll be certainly keeping following closely. We'll be keeping in view all things related to tokenized assets. Now, for our next article, let's go over to the Mastercard article, which is Decrypt. So this is the next article on our list here. Mastercard expands stablecoin settlement via Circle's USDC, Ripple's RLUSD, and beyond. Okay, so Mastercard said it's deepening its commitment to the always-on economy, buffing out its stablecoin settlement capabilities. In brief, Mastercard is enhancing its stablecoin settlement functionality for credit card transactions. The firm will support settlement of regulated stablecoins like Ripple's RLUSD, Circle's USDC, and SoFi's SoFi USD. Settlements will take place across popular blockchains like Ethereum, Solana, and Base. Global finance giant Mastercard is pushing stablecoins further into the mainstream with its latest enhancement, which will offer expanded settlement capabilities of credit card transactions via regulated stablecoins like Ripple's RLUSD, and Circle's USDC. The firm's expansion creates options for issuers and acquirers to settle with additional intraday holiday and weekend card settlements as the firm pursues a true 24/7 economy. The next phase of stablecoin adoption is about real-world utility, especially in settlement, where timing and liquidity matter most, said Mastercard Executive Vice President of Blockchain and Digital Assets Raj Damodharan in a statement. By introducing intraday and weekend settlement options across our global network, we're expanding how partners manage liquidity and operate in an always-on digital economy. This is good. Okay, the firm's stablecoin settlement expansion piggybacks on its existing relationship with Circle and its dollar-backed stablecoin USDC, which has already been used for settlements in select markets. Last fall, it also teamed up with Ripple and Gemini to explore the settlement of transactions on the XRP ledger using RLUSD. In addition, the firm will support stablecoin settlement from Paxos issued tokens like PYUSD, USDG, and USDP, and SoFi USD, the newly launched dollar-backed token from neobank SoFi. As demand grows for faster and more flexible movement of money, organizations are increasingly seeking infrastructure that can operate beyond traditional banking hours, said Circle Chief Commercial Officer Kash Razaghi in a statement. Mastercard's expanded settlement capabilities help meet that need, offering greater choice in how value is transferred and settled. So settlement will be enabled on a handful of blockchains, including Ethereum, Solana, payments-focused network Tempo, the XRP ledger, and Base, an Ethereum Layer 2 network incubated by Coinbase. Transactions in the U.S. and Latin America will firstly be supported by ARQ, formerly known as Dollar App, CBW Bank, Cross River, Lead Bank, and Nuvei, though Mastercard expects further expansion throughout the remainder of the year. Mastercard's move into on-chain settlement is a landmark validation that blockchain technology is ready for the world's most critical payment infrastructure, said Senior Vice President of Stablecoins Jack McDonald in a statement. Shares in the firm have dipped around 2.6% since the opening bell on Wednesday, recently changing hands around 464.87 per share. Okay. Not too bad, my friends. Not too bad. I would say that for this article, what we are witnessing is that, as we've already covered in a few previous videos, stablecoins and the big card players are going to continue to roll out more and more partnerships. They are going to continue to roll out. The key part of this article here is it says the firm's expansion creates options for issuers and acquirers to settle with additional intraday, holiday, and weekend card settlements as the firm pursues a true 24/7 economy. That really is, even if you go back many years ago, the difference between blockchain and crypto versus traditional equities and banking in general. I know that the existential crisis right now with banking is to get to T+0 versus T+1 and all that 24/7 centric settlement. So everything that can be more instantaneous helps the banks get closer to becoming neobanks as opposed to traditional banks. Okay, and of course it helps them save money or be more proactive with it. Okay, Visa. Let's do the next article here. And from what I can see, this article, yes, from the block, Visa Brale test privacy-enabled SBC stablecoin settlement on Canton Network. So, quick article here. Just wanted to update people on what we're witnessing here. So, Visa and Brale announced a proof-of-concept collaboration to test the SBC stablecoin for institutional settlement on the Canton Network. The company said the initiative will evaluate privacy-enabled blockchain infrastructure for settlement with a focus on limiting visibility of sensitive transaction data while supporting programmable payments. So Visa and Brale have initiated a proof of concept to evaluate stablecoin-based settlements using SBC, a US dollar-backed token issued by Brale on the Canton Network. The program is designed to test how privacy-enabled blockchain infrastructure can support institutional payment flows, including faster and programmable settlement while allowing financial institutions and payment firms to maintain control over the visibility of sensitive transaction data, the company said in a statement on Thursday. Visa plans to evaluate SBC as an additional stablecoin option for the institutional settlements use cases, with native support on the Canton Network enabling testing across real-world payment flows. Through our work with Brale, we're exploring how SBC on the Canton Network can support institutional settlement use cases that require both programmability and privacy controls, Kai Sheffields, Visa's head of crypto, said in the release. This collaboration helps us evaluate what it takes to bring these capabilities into production environments. All right, good note. Visa said it believes stablecoins represent a scalable next-generation settlement layer for global payments. Okay, they're saying the quiet part out loud, but really it's not that quiet. It's been quite self-evident. Visa said it believes stablecoins represent a scalable, yes, it's certainly scalable, next generation, yes, cutting edge, okay, settlement layer for global payments. Yes, so Visa simply wants to get a piece of the pie. All right, so for those who just want to be realistic, of course, everybody wants to get as much of this market share as possible. The company first enabled stablecoin settlement in 2021. Visa's stablecoin settlement pilot reached a $7 billion annualized run rate as of April, meaning April of this year. A 50% increase from the prior quarter, so that means things are really taking off. The pilot now spans 9 blockchains, including Arc, Base, Canton, Polygon, Tempo, Avalanche, Ethereum, Solana, and Stellar. Meanwhile, the total supply of dollar-pegged stablecoins is approaching 300 billion, according to the block's data dashboard. Tether's USDT accounts for roughly 188 billion of that total, while Circle's USDC ranks second at approximately 76 billion. Okay, very good. So we've got USDT, USDC, USDS, USD1, DAI, and then 19 others. Okay, so that's what you can see. Very good. And then we've got some other fine details in the footing here. I think that is all for this article. We've got to jump to our next article on our live stream today. So I think the next article is also from the block. Right, okay, so this is similar to what we covered recently a little bit earlier this week on Revolut. Okay, so Revolut's U.S. bank to offer stablecoin services alongside FDIC-insured products, according to Reuters. So here we go. Revolut U.S. CEO Chetan Duransoy told Reuters the company plans to offer access to stablecoins in the United States. The firm applied for a de novo banking charter with the OCC after dropping plans to acquire a U.S. lender. Revolut's U.S. bank plans to offer FDIC-insured products like high-yield investment and checking accounts alongside stablecoin services, according to Reuters, which spoke with the recently appointed Revolut U.S. CEO Chetan Duransoy. The company is not planning to open physical branches in the U.S., though Duransoy said clients will have access to ATM networks. Revolut applied for a U.S. banking charter with the Office of the Comptroller of the Currency, the OCC, in early March after dropping plans to acquire a U.S. lender. That came amid a wave of charter applications from crypto firms as the OCC and other U.S. regulators signaled a more favorable approach. Kraken, for instance, in March became the first crypto-native firm to receive a skinny master account with the Federal Reserve, giving it direct access to core U.S. payment systems. Okay, so let's just reiterate that key point. Kraken, in March of 2026, became the first crypto-native firm to receive a skinny master account with the Federal Reserve of the United States, giving it direct access to core U.S. payment systems. There are at least 14 OCC de novo banking applications last year. Okay, more or less matching the total amount filed during the more conservative Biden administration, the bloc previously reported. UK-based Revolut has long targeted U.S. expansion as part of its plans to develop the world's first truly global bank. Earlier this year, Revolut received regulatory approval to launch a fully licensed bank in the United Kingdom. Okay. The fintech has also increasingly warmed to crypto. Last year, the firm tapped Polygon to enable remittances, POL staking, and crypto card payments in its main app. The company also was selected by the financial Conduct Authority to join a fiat-pegged stablecoin sandbox payments trial. So that's a good step for them in their banking journey, and we wish them good luck. So this is just a continuing theme that we've been covering in previous videos. Revolut is going to be doing an IPO, as we covered a few days back, in the next 12 to 24 months, and there's a big bonus if they can get a higher valuation above 150 million, maybe up to 150 million up to 200 billion. Okay, so let's see our next article. Right, so we've covered that one. So it says now, this article is crypto industry launches PAC focus on software developer safeguards as election nears. So let's just jump to that real quick, my friends. And this will be the last article of the day. So I think, let me just see if it's over here. Let me just pull that up real quick. So let's see here. So is this article coming up or not? I'm not sure. Let's see if this is working. Okay, yeah, so it's here. All right, so apologies for that. Let's get back at it, my friends. Sorry for the delay. I just wanted to make sure the article was there. All right, so crypto industry launches PAC, which stands for Political Action Committee, focused on software developer safeguards as election years. So these are politically active organizations that there's a legal delineation that separates them from really being truly partisan. So they're kind of separate from candidates and parties, but they can fundraise on behalf of candidates and parties. Okay, so it says here, on Wednesday, the Defend Developers Political Action Committee launched, backed by executives and policy leads from the DeFi Education Fund, the Solana Policy Institute, and Uniswap Labs. So over the past year, those groups have been pushing for software developer protections, particularly in a larger cryptocurrency market structure bill called the Clarity Act in the Senate. So what they're really saying here is that the ongoing, we've covered the Clarity Act many times these last few days, which has still really been pending for almost a year now, because it was kind of shelved in June, July of 2025. It's been caught in the gears of DC. You've got lobbyists. We basically have these political action committees that are lobbying on behalf of DeFi Education Fund, lobbying on behalf of Solana Policy Institute, and lobbying on behalf of Uniswap Labs. So a new cryptocurrency-focused political action committee has emerged, this time with an exclusive focus on protecting software developers as midterm elections quickly approach, meaning the 3rd of November. Okay, so on Wednesday, the Defend Developers Political Action Committee debuted, backed by executives and policy leads from the DeFi Education Fund, the Solana Policy Institute, and the Uniswap Lab. So over the past year, those groups have been pushing for software developer protections, particularly in a larger cryptocurrency market structure bill called the Clarity Act in the Senate. Central to that effort is the Blockchain Regulatory Certainty Act, BRCA, which would clarify that non-custodial developers are not money transmitters. Okay, so that's the key point. Non-custodial developers are not money transmitters. Meaning that if you are a software programmer, you are creating blockchain technology that is inherently non-custodial, meaning that it's on the person that controls the password and keys to be self-custody, are not money transmitters. Therefore, that they don't need regulation, they don't need licensure, and they're simply trying to be software programmers. So that is their angle. So while the BRCA was included in the version of the Clarity Act approved by the Senate Banking Committee last month, a late-stage compromise to secure Democratic support removed language that would have extended protections to Section 301 of the bill, which addresses Bank Secrecy Act-related sanctions requirements. So the BRCA has also raised concerns among law enforcement groups who say that the language in that provision could make it hard to crack down on financial crime. On Tuesday, the Blockchain Association sent a letter to Senate Majority Leader John Thune and Senate Democratic leader Chuck Schumer, which was signed by former national security and law enforcement officials urging them to pass the Clarity Act. Right, so again, on Tuesday, a few days back, the Blockchain Association sent a letter to Senate Majority Leader John Thune, who lost his primary. He will not be reelected after November, and Senate Democratic leader Chuck Schumer, who's the minority leader, because the Senate has a slight majority for John Thune's party, now, which was signed by former national security and law enforcement officials urging them to pass the Clarity Act. So this is interesting. For too long, developers building decentralized technologies have faced regulatory uncertainty and enforcement actions instead of clear rules and guidelines, said the PAC's founder Gavin Zavatone in a statement on Wednesday. While legislation and rulemakings are being written as we speak, for some policymakers there is limited incentive to understand the fundamental nature of software development. There you go. So DDPAC said it plans to back lawmakers who actively champion developers' protections, decentralized technology, and permissionless blockchain infrastructure. Members of its board of directors include Uniswap Labs head of policy Brian Nistler, DeFi Education Fund CEO Amanda Tuminelli, and Solana Policy Institute CEO Miller Whitehouse Levine, among others. PACs are increasingly being created to back crypto interests. This blockchain leadership fund, with backing from Anchorage Digital and Chainlink Labs, debuted in March to support candidates who are working to progress digital asset and blockchain policies. The cryptocurrency industry became a major force in the 2024 election cycle, spending millions of dollars through super PACs and other political groups. So far, PACs are having an impact following the unseating of longtime Representative Al Green in Texas by pro-crypto Representative Christian Menefee last month. And so this Houston, Texas district was really, I think, a result of the redistricting. So I think Christian Menefee is already also a senator, a House representative in the Houston area, but they're fighting now over the same seat. So Al Green lost that Democratic primary. They might have been neighboring districts that are now been gerrymandered a bit. So, in conclusion, for today's live stream, you don't have to subscribe to us if you don't want. You don't have to notify or like or comment, but we would love to get people to be talking about cryptodeposit.org prior to us unveiling our other brands and our other sister projects and all that good stuff. Cryptodeposit.org will continue to be what we believe is the absolute best piece of technology to date for fixed income, for stablecoins, and for OTC and all of these specific self-custody. It's one of the most advanced bits of technology stack that we've been working on for really technically over a year. So all of these videos coming right to you, sponsored by yours truly. We just want to let everybody know you are welcome to look at our other videos, our tutorial videos. If you have any questions, just email us at info@cryptodeposit.org. Somebody from the team will attend to it immediately, and we're looking for family offices, we're looking for banking partners, we're looking for strategic partners. We have unlimited capacity because this is really scalable, well past the moon. You know, they say to the moon in crypto, but this is scalable to not just billions, but potentially hundreds of billions and more. So anybody and everybody that wishes to get involved, or they might know somebody, please share these videos. That's all we really ask. So looking forward to seeing you all on an upcoming live stream. Looking forward to sharing more interesting videos with you on this channel, or potentially as we launch our other branded channel. So with that being said, thank you so much for your kind time and attention. If you've stayed to the end of this video, wishing you all a wonderful day, a wonderful evening, wherever y'all may be. And with that being said, let's have a wonderful break now, and see you on another video coming up hopefully very soon, or another live stream coming up very soon in these next few days. Have a good rest of your day, everybody. Talk again soon.